Welcome back. So in the last video we were discussing the causes of differences between bank statement balance and cash book, and we learned about all the entries that are there in the bank statement that you will find in the bank statement but not in the cash book, and therefore it required adjustments in the updated cash book. Now in this video we are going to learn about all the transactions that are there in the cash book that you will find in the cash book but not in the bank statement, and therefore that will also require adjustment. Now there are mainly two types of transactions, the differences or the entries that will be there in the cash book but not in the bank statement, and they both are due to timing differences. The first one is bank lodgements not yet credited, or it is also called uncredited checks or uncredited deposits. Now what are they? These are the checks received by the business from debtors, for instance, or from other receivables from any other third party. They are recorded in cash book by the business, and since the checks are received, they will be debited in the cash book, of course, but they are banked few days later after receiving the check. So again, the reason was due to timing differences that transaction won't appear in the bank statement. For instance, if I have received a check on 29th March, and I did not deposit that check right away in the bank, or even if I did, it won't appear in my March's bank statement. Rather, it will be shown in April's bank statement. Of course, it will be shown, but not in that same month, because that such cases usually occur during the last days of the month. So bank takes few days to process the check, to clear the check, to verify the check, right? So that is bank lodgements not yet credited. Not yet credited means we have received the check and the bank and the business has debited the cash book when the check was received, but the bank will show that transaction on its credit side, right? That is why it is bank lodgements not yet credited, or uncredited checks means uncredited, not yet credited by the bank. So they are not shown on the credit side of the bank statement. When I am comparing my cash book with the bank statement, I will see some uncredited checks on the debit side of the cash book, but they might not be appearing in my bank statement on its credit side. That is why the name is bank lodgements not yet credited. So mainly due to timing differences, such transactions are not shown in the bank statement. Although the business has paid or deposited their check into the bank for collection, but it hasn't been cleared or credited by the bank yet. So this is uncredited checks. Second is the complete opposite of uncredited checks, that is called unpresented checks. Now what are these? These are the checks issued by the business for payments to any supplier or to any third party, and therefore they are, whenever I am issuing a check, whenever I am writing a check for payment, the business records that check in its cash book on the credit side, right? Cash outflow. However, now what is unpresented checks? Again, the same logic. Such checks may also be issued during the last days of the month and may therefore go unreported in that month's bank statement, right? Of course, they will be shown in the bank statement, but may not be in the same month in the next month. So I have credited my cash book with that check for the payment, but the bank hasn't shown this in the bank statement for that same month on the debit side. So when I am comparing my cash book with my bank statement, I will see some checks issued on the credit side of my cash book which will not exist on the debit side of my bank statement. Why? Because they will be then the unpresented checks. So they should appear on the debit side of the bank statement. That is why since they are credited in cash book but they haven't been presented into the bank for payment, therefore not debited by the bank. Again, what we debit is shown on the credit side of the bank statement, and what we credit is shown on the debit side of the bank statement, right? So these are the main two reasons, these are the main two causes of differences that will be adjusted through bank reconciliation statement and its format. I'll show you in a bit. The last reason could be bank errors, as we saw for items present in bank statement but not in cash book. So if there are any errors which we can identify from the bank statement, So they will also require correction in the bank reconciliation statement. And the business should inform about this to its bank as well. Right? Now, what do we do with these transactions? What do we do with these items, with these entries? Unpresented checks and uncredited deposits. They are adjusted in a statement called the bank reconciliation statement. So bank reconciliation statement we prepare to adjust those items that are there in the cash book but not in the bank statement, right? And I will now show you its format. So what have we learned so far? That the business prepares the updated cash book as well as the bank reconciliation statement, and updated cash books format we have already seen in the last video. Now, how to prepare a bank reconciliation statement? There are two ways in which we can prepare the bank reconciliation statement depending upon the information given to us. The first method is if the bank statement balance is given. So we start with the balance as per bank statement. It might be given to you in the question, or the bank statement will be given to you, so you have to see its final balance and begin your bank reconciliation statement with that balance, right? And if we are starting with the balance as per bank statement, so we will add all the uncredited checks. What are uncredited checks? The deposits, the checks received by the business. So they will be added because that will increase the bank statement balance, and all the unpresented checks, the payments, the cash outflows, that will be subtracted from the bank statement balance to decrease the balance, and then we will arrive at the balance as per updated cash book, which we usually prepare before preparing the bank reconciliation statement. So the ultimate goal is to reconcile the bank balance by first extracting it from the updated cash book and then getting the same value in the bank reconciliation statement as well, right? So this answer should match with your updated cash book balance carried down as well, so that it will then give you an assurance that all the entries have been adjusted. What wasn't present before has now been added or subtracted from both updated cash book as well as the bank reconciliation statement. So this is how we prepare. The first method is to add uncredited and then subtract unpresented checks if we are starting with the balance as per bank statement. But however, sometimes we are not given with the balance as per bank statement. We have to find that out. Rather, we are given with the updated cash book balance, or the information is such that we first prepare an updated cash book and we use that balance, the CD balance of course, to find out the bank statement balance that was there previously. So now we just have to rearrange the formula, and we will then now begin with the balance as per updated cash book. We will now add unpresented checks, the payments, the cash outflows, and we now subtract the uncredited checks or the deposits to arrive at the balance as per bank statement. This is very logical. Previously we were starting with balance as per bank statement and we were adding uncredited checks and we were subtracting unpresented, so that we would arrive at the balance as per updated cash book. But if I am starting with updated cash book balance, if I am starting now with updated cash book balance, so unpresented will be added, the sign will change, and uncredited was being added before, it will now be subtracted uncredited, and so that I arrive at balance as per bank statement. If you just remember one method, usually the first one is easier to remember, that we start with the balance as per bank statement, you can easily remember the second as well, that if the information is such that you have to start with the updated cash book balance, so add unpresented, subtract the deposits, and then we will arrive at the balance as per bank statement, right? So this is how we adjust all the entries in the bank reconciliation statement or in the updated cash book. And in the next video we will solve a question so that we can apply all the knowledge that we have studied so far, and then it will give you a much clearer picture that how the two are made.